Buonasera a tutti, ben ritrovati. Siamo qua per
Good
commentare
afternoon, everybody, and welcome back. We are here with our Executive Chairman, Christian Fabri, our CEO, Orazio Iacono, and our CFO, Massimo Vai, to comment the results of H1 2025 following the board meeting, which was wrapped up about an hour ago. Let me give the floor to our Executive Chairman, Mr. Christian Fabri. Thank you, and good afternoon, everybody. Let's begin by illustrating the first half results, as usual. And we can begin with our net profit figures, which is up 5% compared to H1 2024, with an overall growth worth 11 million euros. At the same time, while having increased investments by 20% compared to the first half of last year, we had a reduction in our group's financial debt position, which is now below 4 billion euros, with an overall reduction equal to over 100 million euros when compared to H1 2024. And I'd also like to remind you of the fact that this figure also includes the payment of dividends, which took place in June. But Massimo will be explaining all of our cash flow details later on. So, all in all, our net result is on the rise. Our debt is decreasing, and we're continuing to invest, which is in line with what we had defined in our business plan. Now, if we move on to the P&L, beginning with the EBITDA all the way down to net profit. In terms of EBITDA, we stand at 722 million compared to 733 last year, with an 11 million euro reduction in absolute terms. And later on, we'll be seeing which elements led to the reduction of the temporary opportunities that we were able to take advantage of in the previous years, which reflected in 2024 and which were reduced as an overall contribution in 2025, but we also achieved an organic growth. But we can see that also in terms of depreciation and amortization, we have had an overall impact, which leads us to an increase of some 15 million euros in absolute terms compared to last year, also due to the effects of the increased investments we made both this year and last year. So these investments lead to a higher amortization, although in terms of overall provisions, we've had a reduction equal to 23 million compared to the figures we had last year. So we had an increase in amortization due to increased investments, but we've reduced provisions, also given the normalization of our various components, and also because we had a lower contribution for the last instance markets, and part of that reduction is linked to the reduction of certain one-off situations. In terms of EBIT, we stand pretty much on the same levels we had last year, minus some 2 million. Then, as we also saw in Q1, the financial charges were down considerably, and compared to H1 last year, we reduced things by some 24 million, and later on, we'll be seeing in the details on the right-hand side, that is something that we're just continuing on a quarter-by-quarter basis. In terms of taxes, we've had an increase linked to the increase in the pre-tax figures, and we've had a slight increase in tax rate from 28 to 29% compared to last year, which brings us to the net profit that we mentioned earlier, equal to 229 million euros. If we look to the results of the provisions, we can see that compared to H1 2023, which also included extraordinary provisions also linked to the high turnover and the energy crisis, progressively we have seen a reduction on a semester by semester basis, which now brings us to the current figure, which is equal to 58 million, which reflects a more normalized situation of both the market and the contributions of various businesses the group has. If we look on the right-hand side when it comes to financial charges, you'll notice that this contribution in Q1 had a major reduction when compared to Q1 2024, which still hadn't absorbed the benefits of the way in which we progressively started managing the shaping of our debt to take into account the daily and monthly fluctuations. That is something we conducted during 2024, and already in Q2 2024, we had become very effective, which led to further benefits, also given the reduction in variable rates, which are used in this context. And we've seen that also in H1 2025. And in fact, Q2 2025 has improved compared to Q2 2024, which brings us to the 32 million euros that we mentioned earlier. Now, moving on to EBITDA. You may remember that when we drafted our business plan, we explained that we had temporary opportunities pretty much linked to the last instance markets and the super eco bonus and a number of items related to energy fixings that we had done on waste energy plans, and we'll be going into this later. And all in all, they accounted for over 170 million euros. Well, at the same time, we had the M&A organic growth, which brought us to a 7% average growth on the business plan period. And what we're seeing in this half is what we mentioned in the business plan, which means that we are seeing less temporary opportunities, while at the same time we have an organic growth, which minus those effects brings us to a positive effect in all business areas, +7 in energy, +14 in waste, +23 in networks. And if we consider that energy, the 7 million in energy, also has to take into account the negative effects of the SDG of the first half, which wasn't present last year. So if we also take that effect into account, the business growth is quite obvious with the +7 million euros. Moving on to the profitability indicators, you may remember that in our business plan, for the past 2 years, we've been mentioning value creation. You saw that in the net profit, and you can see this also in the profitability indicators with an increase in ROI and ROE, both of which stand at double-digit figures for the first half of the year, if you compare them both to 2024 and 2023 during the same period. Now, moving on to the various business areas, beginning with energy. In this business, we have 46 million euros in temporary opportunities which are no longer there. So a vast majority of the impact is the one we're seeing in energy, and this is linked for the most part to the last instance market, especially the Salvaguardia market. We were reassigned the tender, but with a much lower spread, although we've increased volumes. And we're also seeing this with the normalization of the gas last instance market, which are progressively reducing the volumes, which had grown considerably during the energy crisis, which was when we had guaranteed the gas supply to those customers who were losing their suppliers. So we had an increase in sales, which was quite considerable, and we're slowly going back down to more normal figures. We're seeing a tail of the super eco bonus, which last year still had a small 6 million euro contribution, which brings us to the like-for-like situation in 2025, And you'll see that the overall growth of this market brings us to a figure equal to +7. And if we also take into account the fact that we have recovered the investment on STG, which, as you know, will be giving its benefits beginning on April 1st, 2027, and which we're already managing in line with what we had expected in our business plan. All things considered, therefore, you have a growth of the liberalized market, which allows us to offset the negative elements we mentioned with a +7 million euros. Moving on to waste and networks, and let me give the floor to Orazio for some comments. Thank you, Christian. Good afternoon. And I'd like to begin with our waste business ID, with a specific focus on M&A. We made the acquisition of 100% of Ambiente Energia of the Mazzotto Group, which operates in the industrial waste sector, specifically in water treatment, with a plant in Schio, in the Veneto region, a very wealthy part of Italy. And Ambiente Energia will be extending its global waste management offer in one of the most productive and most dynamic areas of the country, where we are already rooted in for quite some time. And this is worth 120,000 tons with an EBITDA worth over 3 million. This acquisition will have a positive impact on H2. We are not stopping our growth in the waste business. And if we move on to the following page, you'll see that we have a structural growth worth 9%, which has an even greater value because it came about in a complex macro scenario in which industrial production is going through a period of global uncertainty. But we were able to see contributions from all activities, urban collection, waste treatment, plastic recycling, soil remediation. And therefore, this growth is also brought about by a broad customer portfolio, a diversified portfolio at that, which allows us to have a resilient growth. And our leadership on the market allows us to take advantage of the price dynamics and the inflation dynamics. We have the various businesses we manage which contributed to the growth, beginning with the collection, which is on the rise, specifically because of the returns on inflation, given the concessions that we were awarded following tenders, concessions which have a 15-year duration. And we also have the margins linked to the expansion of services. These are recurring activities for the years ahead, all the way up to the expiry date of the concessions, which is 2037. When it comes to waste treatment, we have growth both in terms of the special waste stemming from urban waste collection, but also on industrial waste. And despite the complex context, we have increased our perimeter. We are now up and running with our F3 plant, which is the one which treats hazardous waste in Ravenna. Then we have the TRS platform to pre-treat the industrial waste, which we made the acquisition of a few months ago. Then we also have the Montale waste energy plant in Tuscany that we're managing. And then we also had a slight increase in our perimeter linked to the global waste management and services we offer, with a specific reference to our food and beverage and pharmaceutical customer base, which has grown slightly, where we offer global waste management services. Moving on to the recycling sector, we have grown by 3 million. And as we also mentioned during the business plan presentation, we're seeing a positive trend here due to an increase in demand, especially as far as PET polymers is concerned, because that is affected by the European Directive on single-use plastic, with a 25%, which becomes mandatory as of this year compared to the previous directive, which had a threshold equal to 11%. We're also growing in the soil remediation sector. We're up 2 million. We are the market leaders, and the growth of margins here is linked for the most part to ACR Reggiani, which is a company we made the acquisition of, which is the leader in soil remediation, and they have a number of interesting contracts with some of our country's biggest businesses. So we're seeing a growth in waste based on structural drivers. It is a solid form of growth, which has been able to more than offset the reduction in margins linked to the energy business, linked to commodity prices in the energy crisis we experienced 2 years ago. We can now move on to the networks business. And as far as this business is concerned, we are very healthy indeed as far as our infrastructure is concerned. We are very resilient, and we were able to prove our resilience even during the most recent extreme climate events. We are number one in terms of water quality certified by Hera. We stand at 3.6 billion euros in terms of RAB, and we'll be moving up to 4.5 billion thanks to a major investment plan. And for the benefit of all of those joining us even from overseas, this business is regulated by a very reliable authority, a very reliable regulator. It is a business which is protected by all macroeconomic scenarios, by rates, by fluctuation and demand. Deliberation 87 and Deliberation 130, which refer to operating costs, coverage, and inflation, lay the groundwork for a tariff review for the 26 and 27 two-year period, which is more in line with our company costs, and it will lay the foundations for a stabilization of inflation rates, which will be more generous and more in line with the real profitability of the sector. And if we move on to the following slide with some figures, you'll notice that we continue to grow significantly with an EBITDA growth worth plus 9%. These are very solid figures, also because the first half report don't include the premiums we'll be receiving in water, which will certainly have an impact on H2, and we'll be mentioning this later on. But for the time being, let's focus on the regulated businesses we manage and which contributed to our growth. We can see that water grew by 10 million. In this case, the growth is pretty much due to the major investments that we launched with some innovative projects, both in terms of efficiency and in terms of resilience. Thanks to our investments over the past few years, we have received data incentives, and this year we received 26 KPIs or premiums for the 2022-2023 two-year period, given the quality objectives we were able to achieve. And as I mentioned earlier, these premiums will have a positive impact on the EBITDA in H2. We have 4 million euros EBITDA with a growth in RAB due to investments on development. The remaining 6 refer to inflation. On gas, we had an increase in 13 million euros. Almost 12 million referred to Deliberation 87, allowing for the recognition of OPEX, referring to Deliberation 570, 2019, and the remaining part is equal to 2 million due to increase in RAB in investments on development. Even here, we have the effect of inflation on gas, and with Deliberation 30, we recognize the inflation of RAB, replacing the deflector with the KPIs we had mentioned in May, which leads to the stabilization of inflation indices, which, as I mentioned earlier, are more in line with the real profitability of the sector. These three things together have more than offset the cut in WACC. And finally, we have electricity. Even here, we have a contribution from electricity distribution. It's a smaller growth, but that growth is brought about by the same drivers we mentioned for the gas business. As you can see from the graphic here, all of the networks contributed to growth. The only exception being district heating. We still have an in-progress tariff, which is currently being reviewed by the authority, and we're waiting for the final regulatory framework. And we're working very intensely so that we'll be able to have higher margins from the sector. So again, the results are in line with our expectations. There are no surprises. Our investment plan will continue with a plus 33 growth compared to last year, meaning that in a year in which we've had a reduction in WACC in two businesses, namely gas and electricity, networks continue to grow, also thanks to our constant focus on increasing efficiencies in operations, while at the same time improving the quality of service and the quality of our infrastructure. Thank you, and I'd like to now give the floor to Massimo Vai. Good afternoon, everybody. And as usual, let me try to illustrate a couple of slides to give you an overall view of our cash flow in this year's H1. As you can see on the left-hand side of the slide, the cash flow generated in the first part of the year is equal to 675 million euros for the operational side of things, with 139 million euro growth compared to the same period last year. We then have a positive contribution from the net working capital to complete the thermal season for 2024-2025 with cash worth 41 million. You may remember that in March, we had an absorption worth slightly less than 80 million. Then we have the provisions, which stands pretty much on the same levels we've always seen. And then we also have to mention the CapEx, both in terms of the maintenance CapEx and in terms of the development CapEx. All in all, these two components are equal to 395 million euros, which is up by 67 million compared to the same period last year, which goes to show what we had already mentioned previously, namely that our business plan, which is in the execution phase and already in 2025, has a major growth in our operational investments. In Q1 2025, as far as maintenance was concerned, we had invested 137 million, slightly above twice the amount. And even as far as development is concerned, we stood at 51 million, whereas now we stand at 114 million. So we're speeding things up so that we can achieve our results that we're targeting for 2025. Also in Q1, we had the impact of the distribution of dividends. We are still missing some 20 million, which will be paid after June 30th. It will be paid in the next few weeks. So, although we absorbed all of or most of the distribution of dividends, you'll see that our debt, all in all, is reduced compared to the levels we had on the 31st of December 2024, and that is now down by 37 million. So we stand below the figures I had shared with you in our net financial position that I had to mention for last year. What we expect for the next few months is a slight increase in these months due to the seasonal effects that we'll be seeing in the final part of the year, which is what we always see. But we'll also be completing our gas supply activities, our gas procurement activities, rather. Then we'll be paying some tax debts that we already had at June 30th. Moving on to the graph on the right-hand side, you'll see that as far as the net debt to EBITDA ratio, which, as you know, is a benchmark in terms of our financial soundness, but it's also a way to be flexible for possible opportunities or for unexpected scenarios, for M&A opportunities, for example, which don't have the same parameters we may have. We stand on the same values we had at the end of last year, in which we illustrated in late March. So we're currently standing at 2.5 times, 2.49 times to be more specific, which is slightly better compared to our expectations. Moving on to the next slide. Even here, we don't have too many new things to mention compared to what we had shared with you in March, or rather in May for the March figures. Our average cost of debt stands at 2.75%, with a good management of reimbursements and renewals, allowing us to have a smoother variation compared to our average cost of structured debt compared to the fluctuation of the interest rates on the market. As you know, on January 8th, we issued a bond, a green bond, with a pre-funding activity. That cash availability, along with the better than expected final results for last year, allowed us to optimize the proceeds from this extra cash. And then we had the performance of the financial management that the executive chairman mentioned earlier, allowing us to add a positive contribution to the bottom line of this first half of the year. As far as the type of debt is concerned, as you can see, we have a very limited exposure to interest rate fluctuation. Only 3% is variable, whereas 97% is fixed rate. Finally, as far as our rating agency assessment is concerned, Moody's has improved its outlook from stable to positive, which is the consequence of the assessment Moody's made following its country risk assessment. In conclusion, therefore, we were able to wrap up H1 this year in line with our expectations, with excellent financial flexibility and with a good outlook as far as the end of the year is concerned. Back to the executive chairman for some conclusions. Thank you, Massimo. Let's take a look at the main takeaways for this very brief overview of our H1 results. Our results give us a snapshot of a group which is very solid and capable of being in line with our expectations and our business plan commitments. We had a 7% structural growth, besides the temporary opportunities that we were able to take advantage of in previous years, and we are in line with our business plan. We had a growth of our net profit, which is equal to 5%, in line with our business plan expectations, and we also have a great financial soundness, great flexibility, with a 2.5 times net debt to EBITDA ratio, which is better than last year. So we are very much on track with our business plan targets, and that is the direction we're headed in. As usual, we kept things short to leave time to you for your questions. I know that today was a very intense day with plenty of presentations and plenty of conference calls. We are the last ones, and hopefully we can keep things to a 1-hour presentation. Over to you for your questions. Good afternoon, and our first question is by Emanuele Gione, Kepler Cheuvreux.
Buonasera, mi sentite?
Good afternoon, I hope you can hear me.
Perfetto, grazie
Thank you. Thank you for your presentation. And let me, by asking you an update on the retail market. What is your outlook? What is the competitive pressure? I noticed that your customer base in one quarter went from 4.6 million to 4.5 million customers. So why the change? Is it due to the churn rate for other customers who chose other suppliers? Are these lost customers? What are the dynamics you're seeing? And what do you expect for the upcoming quarters? Then I have a second question, more in general, on the moving parts for H2. You're going to start consolidating IMAG, maybe not for the entire 6 months, since you still haven't completed the closing. And can you give us an update on that? And then other moving parts for H2 refer to the technical quality premiums for water. And can you just remind us of the exact figures there? You mentioned 26 million, but I remember 14 million from a previous conference call. And what are the other moving parts for EBITDA and specifically for H2 2025? One final question, maybe. I noticed that you announced the minority buyout of Aliplast. There were a number of articles in the press regarding the 3i fund, which has a share in Hera Ambiente, and they may be selling. Obviously, the ideal candidate there would be for you to have another minority buyout, even there. So can you give us some insight? Can you give us an update on your interest in that kind of an approach? Thank you. Thank you, Emanuele. Thank you for your questions. Let me begin by the market. We're seeing an increase in competition every year, and this year is no different. Even this year, we're seeing an increase in competition, generally speaking. We're holding our own on the market, but what we're seeing is that on the STG side of things, a few customers are leaving, other customers are being transformed. The overall situation is positive between the customers that were moved to the liberalized market and those who were left. The business plan, you may remember, had 4.5 million customers at the end of the business plan after the absorption of the SDG market. So we're in line with our expectations, the ones that we included in the business plan. And they're slightly better compared to what we were expecting when we made a bid in the tender. So we're doing quite well. In H1, we were able to offset the negative effect of those lost customers with a better margin in the traditional market due to the market mix, but also due to the recovery we saw in some shaping costs that we had last year. So when comparing the figures year on year, we were able to recover something, and we had an average margin which is a little higher. Plus, with the offers we had set up during the energy crisis, which transferred the shaping costs, and we're now starting to see the effects of that. So that was an answer as far as the market is concerned. Referring to the moving parts for H2, let's begin with IMAG. Where do we stand with IMAG? In July, we had the political partners who deliberated, and 90% of the public shareholders deliberated, the municipalities basically, and 100% of those who deliberated gave a positive response. We now have a technical suspension for some verifications from the competent authorities, so we're waiting for that process to be completed over the next few months. And therefore, hopefully, for the Q3 results, we'll have some news.
Se posso un follow-up
If I may, with a follow-up question for IMAG.
Il fatto che possa essere magari consolidata 6 mesi, cioè meno di 6 mesi rispetto alle attese attuali.
Do you think you may end up consolidating less than 6 months? And what impact would that have?
Sì, guarda, noi abbiamo avevamo il programma di
Well, we were planning to wrap up the transaction by the end of the summer, so we're in line with the timeline we had in mind. And if the final verifications will end up being positive, we'll be able to consolidate the company for the last quarter of the year. But again, we have to wait for the final steps, for the final technical steps to be completed. So in January, we completed the industrial agreement between the two companies, between Hera and IMAG. Then in July, the political public shareholders deliberated positively, and then now we have to complete the technical verification stages. The antitrust, for the time being, has given the green light for the single markets. And then moving on to the gas distribution side of things, where we currently have 5%, 50% Hera and 50% IMAG, and we have to have a verification there regarding the competition. So we'll be waiting for the final verification of the transparency of the entire procedure. And that goes for the market assessment. And then, of course, we'll also have to have another stage during which we'll have to verify the administrative side of things with all municipalities. These are assessments which have already started. We're just waiting for the technical processes to be completed by the end of the summer.
Other moving parts.
Certainly in H2, we won't be seeing major elements of discontinuity compared to what we saw in Q1. And that applies to all the trends we've seen in the P&L. So we'll continue to reduce the temporary opportunities, but at the same time, we will continue to grow in the networks business, which will grow in a linear way. But we also have to consider the 30 million euro premiums that we will be factoring in the next quarter. We received the news after we had closed the first half figures, so we decided to check them. We wanted to include them in the H1 figures, but we'll be considering them in the Q3. And this is something extra compared to the linear projections, and Hera is continuing in its growth process, as Orazio mentioned earlier. So we'll continue to grow. So on EBITDA level, these are the elements I wanted to mention. But maybe what you're most interested in is the P&L flow. So we'll be continuing to reduce the provisions, and we'll be able to more than offset amortization. And we're seeing a number of quarters that have already become efficient in terms of financial charges. So again, we'll be able to extract further value to the end of the year. So we saw that by business, we saw that by the various lines and the P&L, and everything is quite obvious. As far as minority buyouts are concerned, we completed the outlet class deal. 3i is moving, and we're also paying a careful attention to things. And as Christian was saying, we perfected the acquisition of the remaining minority stake worth 20% in Aliplast, which is performing well, as I mentioned earlier. And then as far as 3i is concerned, we are making our assessments, and of course, things need to be done at a reasonable price. So I think that is the best thing that we can do. We've always done it, and that's how we will continue to proceed, of course. And of course, we have an important role to play in the sector. And our leadership allows us to be market consolidators, which, as we all know, is very fragmented. This year we completed 3 small transactions, the ones that we've seen and in the past, and we'll continue to act as leaders on the market. Thank you. Thank you for your answers. Thank you. The following question is by Javier Suarez, Mediobanca.
Salve, buonasera.
Good afternoon, everybody. I have 2 or 3 questions for you. The first refers to slide 10, your closing remarks. You mentioned a structural growth equal to 7%. I have a conceptual question. When we talk about a 7% structural growth, is this a statement that you use to showcase the growth in H1 2025, or what you want to say is that you have a high single growth for the company? This is a question on the structural growth of the company. Now, I saw your business plan, which expects to have a 6% growth, but if we backtrack, what Hera has grown over the past 10 to 15 years, the growth has always been more than that. So what you're saying with that plus 7%, is that a temporary snapshot which showcases what you did in H1 2025 organically, or is it a more structural thing? So that's my first question. My second question is a follow-up to Emanuele's question regarding your 25%, the 25% Hera Ambiente stake. The CEO was saying that it's a matter of price, but conceptually speaking, is it fair to say that there is no better option to Hera than that of buying a minority stake of a company that you know in and out, and which is an essential part of your growth for the years ahead? Is this a balanced statement? And would this be an operation that would be part of your balance sheet headroom for something which shouldn't be excessively burdensome? And the third question is on guidance, some guidance. Let me just try on net income. Do you feel comfortable with the net income you have for 2025? The consensus, if I believe, is at around 470 million euros. Thank you. Thank you for your questions. Let me begin with the first statement. Now, in our business plan, we had an average EBITDA growth without the temporary contributions, which was 7%, and that's what we posted in H1. So that's an average, and we are in line with that average growth trend, which we want to confirm. Also because we presented the business plan 6 months ago, and we're still on track with it, although we're already starting to think about the upcoming business plan that we will be presenting to you in 2026. So for the time being, that is in line with what we mentioned as far as the business plan growth. And of course, a profit is in line with what we included in the business plan, also as a way of guaranteeing an increase in profit. This is a partial answer to your question on forecasts. As far as profit is concerned, we're confident that we'll be able to close the year with a growth compared to the previous year. Now, whether or not that growth will be able to 4, 5, or 6%, that's something that will have to be seen as we develop the second half of the year. But again, we're working on things, and we're confident that we are creating value. And as you've seen, we're doing something very complex, but also quite straightforward. We were able to grow consistently based on the opportunities we saw over the past 2 years, which, as you know, we had the Super Eco bonus and the last instance market. Last year, the Super Eco bonus was eliminated, and it had a lower contribution compared to 2023 with 80 million, and despite that, our EBITDA grew by 90 million. So our organic growth there was equal to 170 million euros all in all. So we were able to more than offset that activity. Even this year, we've had a decrease in the last instance market. So we are proceeding to offset that. But that's on the EBITDA level. But below that, we are working on a number of operations allowing us to bring out the industrial value that we're generating. Because, of course, on the one hand, we have the last instance markets, and the Super Eco bonus gave us positive contributions, despite some burdens they brought about. But on the other, the fact that we have a more normalized energy scenario allows us to reduce provisions and financial charges back to a more streamlined situation that we had in the past. And we eliminated a number of costs that we had to have, given the higher volatility and the higher financing needs. And with the higher flexibility we needed to have back then to deal with the spikes in prices, which you may remember were quite consistent. They were quite large and differed from one month to the other. We no longer need to have all of that availability anymore. And we're reducing costs, and we are working on the industrial side of things and on the provisions and on financial charges, so that the value we generate can be felt all the way down to the bottom line. And in fact, we didn't even look to a restatement, because of course it's complicated and it's also somewhat intimate. But we are comparing things to the net result we had last year with all of those contributions. So this is a challenge that we're working on, and for the time being, things are looking very well, with great determination and with the great ability to execute, which is what we've always had, and we'll continue to work in that direction. So this is the overall picture.
Sulla parte del 25% di Hera Ambiente,
25% of Hera Ambiente you mentioned. Of course, it's a company that we know inside out, and therefore we are interested in the possibility of buying it back. And of course, as Orazio was saying earlier, that needs to have the right conditions, the right prices. So we're starting to see things, and we'll see what's at stake there, and that's another thing that we will be assessing to see how things stand. And then, as Orazio was saying earlier, we tend to tell you what we've done once we finalize things. And we're looking to Hera Ambiente because, of course, it's interesting, it's a great company, but we're also looking at other files, at other opportunities. And our M&A office is always extremely busy, and many of the things they deal with are potentially interesting. Since we always focus very well on finding the right matches to our company and to our business model so that we can extract synergies and so that we can find the right price, we have to look at the things that are in line with those prerequisites we have. Thank you very much.
La prossima domanda è di Francesco.
The next question is by Francesco Sala, Banca Akros.
Buon pomeriggio a tutti, grazie per l'opportunità delle domande.
Good afternoon, everybody. Thank you for this opportunity. I have 3 questions for you. The first is on the waste treatment business, and specifically on plastic recycling. What are the margins there over the past few weeks, and what prices do you expect over the next few months? And will we be seeing any more external growth opportunities in the coming quarters? Second question is on gas distribution. Can you give us some details regarding the impact on H1, both on the recovery of OPEX and of the deflective?
Terza domanda, se potete darci le vostre aspettative in questo momento sull'andamento del
Can you give us your expectations regarding the working capital trends for H2?
Va bene. Orazio, vuoi andare tu sul treatment, sulla plastica?
Allora, sul trattamento, quindi
as far as waste treatment is concerned,
il trattamento in particolare hai chiesto, Francesco, sulla parte
you were asking us a question regarding recycling.
Come vi dicevo,
and as I was mentioning earlier,
un aumento della domanda,
we noticed that there has been an increase in demand, and that's something that we expected. It's something we had talked about in the past. So basically, we're seeing the effects of the single-use plastic regulation, which requires a minimum amount of 25% recycled PET. We work on a number of different polymers. This is one of our main trades. We have PETs, which can be both film and chips. And in this sector, we've seen a growth. In volumes, sales have increased slightly by 8,000 tons. Even the price of recycled plastic has gone up. We are over 1,600 euros per ton. So we're seeing the effects of this regulatory boost. And then, as far as waste treatment more in general, the outlook on prices is high. Prices continue to be high. The prices that we are seeing in 2025 are in line with the ones we saw in 2024. The market is short, and taking waste abroad costs more because, of course, logistics costs have grown. So our plants are running at full capacity. We have no saturation issues. And this, of course, helps us to achieve the margins that we showed you earlier. And we also expect to hold on to them for H2 as well. As far as gas distribution is concerned, the IPCA side of things, if I understood correctly, keep in mind that inflation needs to be integrated. We have the normal deflator and IPCA. As Orazio was saying earlier, the point is that the authority finally realized that the indicator they were using was one that was simple to measure with a stable inflation, whereas with the intense oscillation of inflation, it was not very reliable. So much so, in fact, that it was reviewed retroactively. So the fact that the growth of inflation has already been defined on the previous indicator, the figures had to be reviewed by IPCA. And it includes the normal inflation expected during the year, plus the recovery of the value we had in 2024, as far as tires are concerned, which is worth roughly 2.5 million for the first half of the year. And we've factored in slightly over half of that. And I hope that was your question. Yes, it was, in fact. As far as your question on the working capital is concerned, let me give the floor to Massimo. Of course, the main elements are linked to the seasonality of things. Well, yes, as usual, with a company our size, it's difficult to give you exact forecasts for the working capital. It's quite complex. We always give a projection for the variation, which is we expect to be on the rise compared to what we currently have. If we look at the macro trends, which typically have an impact on the year end, we expect to have an increase in working capital compared to the figure we currently have due to the effect of two things. On the one hand, the start of the thermal season. So with the normal absorption of working capital linked to the difference between the cashing in and the payment for energy, especially for gas. And then also regarding the impact for gas procurement, which we started doing in May. And therefore, we immobilized the working capital, and those effects will be seen in the second half of the year. Then, of course, in December, the amount of gas we'll be selling will depend on the evolution of the thermal year. So it's never a fixed number. It depends on the thermal year, depending on how cold or how mild the winter is. Massimo was very clear in describing the drivers. Then, of course, the expectations we had on the combined contribution of these drivers is slightly above what we were expecting. Regarding the price dynamics and our commercial activities, that of course, if it's slightly colder in December, or slightly colder in November, or slightly warmer, of course, a few dozen million euros can change in terms of the working capital. But given the size of the company, those kinds of changes aren't very reliable because, of course, a few dozen million euros don't change very much. And then we don't have any specific issues. Our customers are paying promptly. We're invoicing fine. As far as gas procurement is concerned, we are in line with the amount that we had last year. maybe a slight variation in volumes, some slightly lower prices, but there's no specific driver which we're concerned about. Slightly lower volumes in gas, slightly higher volumes of electricity. So that's the overall dimension we're referring to. Thank you. Thank you very much. Any further questions? Yes, we have Davide Candela, Banca Intesa San Paolo. Over to you, Davide.
Sì, buon pomeriggio anche da
Yes, good afternoon. Thank you for your presentation. I have a couple of questions on energy supply, a little bit more high level regarding the market context. Do you expect to see a reduction in competition on the market? And if not, what are the initiatives that you are working on to protect your customer base and your margins? And a second question linked to the first one, how is the M&A market doing? Recently, we saw a deal on the market, and in that case, the recognized multiples were the outcome of the competitiveness we're seeing and the customer switching we're seeing. Of course, your insight would be useful, besides the fact that all customer portfolios are different. Thank you for your very interesting questions. Let me begin by saying that competition has increased. We're working on two axes. On the one hand, we want to be focused on customer loyalty, on post-sales, and on the best possible sales as far as the incoming side of things is concerned. And we're also working to hold on to the quality customers. And I mentioned the word quality because in maniera non troppo ortodossa, ecco, non aiuta molto il churn. If you acquire customers in a not very orthodox way, it doesn't really help your churn rate because those customers then disappear just as quickly as you conquer them. So we're also working on post-sales, which is something we've always done, and over time it has allowed us to have a lower churn rate compared to the market average. And we focused on commercial development on the one hand and customer retention on the other. So there's a lot to do. And of course, I don't want to mention too many details, but let me just say that we're working on a number of different initiatives. But it's not so much the reflection of what is currently happening. It's the way we've always worked. Every year, we always try to improve things, optimize things, and grow both in the back and in the front. And they're becoming increasingly integrated. And those are the initiatives that over the years, in fact, have allowed us to move from a 1% market share to an 8% market share, which is where we currently stand. And then Emanuele was saying that customers are on the decline. Well, of course they are. Last year we acquired new customers who didn't know us, and they are being courted by our competitors. We knew that some of those customers would have left us, and retention for those new customers isn't very easy. The levers there are limited, but in the short term, if they leave, it's all right. But in the long term, of course, it's something that we would be sad about because those are investments that we're making. We like to hold on to our customers, to all our customers potentially, but there's only so much you can do. As far as the deals out there, every asset has its price, and we are used to considering a deal on customers if we look at the euro per customer. Not all customers are the same, of course, and since they aren't the same, they have different margins, different loyalty levels, different efficiencies that can be taken into account. They can be more or less recognized in the deal, or more or less existent for that specific customer base. So it's difficult to mention a general trend. Evaluation was made there, a negotiation took place, and it's based on that specific customer portfolio. What we're currently seeing is that even with a higher churn rate, take into account that when you work with structures, you have to take into account the fact that not only you're buying customers, but you're also buying a machine, so to speak, through which you can hold on to those customers over time, and through which you can work on a customer base through increasing efficiencies and also offsetting those customers, because you also end up buying a sales network that can support you. And if you consider all of these different effects, what we're currently seeing is that customers are worth more compared to what they were worth a few years ago. And then as far as margins are concerned, of course, there are certain segments in which, due to the energy crisis, I'm referring to the large industrial clients, there used to be higher margins because, of course, those customers had high levels of working capitals, high volumes and low margins in normal conditions, whereas during the energy crisis, those margins went up with the hedging that existed, and also considering the shaping costs, whereas now we're seeing a contraction in margins. We have a small position there, and it's very marginal compared to the size of our portfolio. Thank you. The next question is a follow-up by Emanuele Oggioni, Kepler Cheuvreux.
Scusate, giusto rilasciandomi al consolidamento e alle opportunità.
Just going back to consolidation and the sector opportunities, specifically in the energy supply sector. I know you can't answer very much, but I read an article recently which mentioned Hera being interested in bidding on Uno Energy along with other competitors. Is this an opportunity you're looking at? Is it just one of the many opportunities you're looking at, or are you simply not interested? Because you may have considered the gas distribution assets plus a 25% minority in waste, plus the extension of the concessions for electricity distribution. You certainly have a major leverage opportunity, but of course you always need to do the math, don't you? Also because the figures mentioned were 500 million, if I remember correctly, and they have a customer base equal to some 500,000. Of course, all portfolios have their value, but that would be very interesting, at least based on what the article stated. Well, you know us. We look into all files, we consider any opportunity, and then we assess them. When it comes to that portfolio, the euro to customer ratio wasn't very relevant, since those customers had average consumption rates which are much higher than the average retail customers, so it wasn't the right driver. But again, we look at all opportunities with interest, and we always consider all market opportunities which are compatible with our business portfolio. That's what we do. We look at these opportunities, and we try to understand if they can be integrated and how they can be assessed. Then, of course, we'll have to make some choices because we have plenty of financial possibilities to continue to invest in M&A, but it's not something endless, it's not infinite. So we're trying to make the right allocation choices. And then, of course, you need to have a few prospects to work on so that you can then zoom in on the really interesting ones. And that's what we do. We're zooming in on the best opportunities. Thank you. Thank you for your answer. Thank you. I know it wasn't what you may have expected, but you're familiar with the style we have. We can't say too much when it comes to what we're doing or what we're not doing. And of course, the outcome of our assessments depend on how things go. I don't know if there are any other questions left at this point. Apparently not.
Sì, credo di sì. Mi sentite? Pronto?
Sì.
Yes, can you hear me?
Sono Roberto Letizia di Equita.
Yes, Roberto Letizia, Equita.
Forse l'operator si è perso il riferimento. Io ho una domanda invece sulle temporary opportunity.
I have a question on temporary opportunities, a very quick one.
Il piano prevedeva la perdita anche consistente.
In your business plan, you were expecting a loss in temporary opportunities, but there's one which is upcoming. And I was wondering if with the next default market tender in September, which is closer, do you have a different visibility compared to your business plan assumptions regarding the loss of those types of temporary opportunities? So with the upcoming tender, are you seeing a more relaxed market? Or is there a potential upside on this year's results and maybe a higher upside for 2026?
Ma rinviamo le risposte, diciamo, alla trimestrale prossima.
Well, we can hold on to the answers for the Q3 report. Yes, of course, the tender is coming up. And we'll see if and how to make our bid. We still don't know the details of the rules of the competition, but every year we have to decide whether or not to make a bid. These are temporary opportunities, they're complicated markets. Whenever we make a bid, we want to be sure that we do have some margins we can take advantage of. So we're still taking a look at the portfolio and if and how we make a bid. The competition will be happening in September, and therefore we still have some time to think things through. We'll be looking into it. Thank you. But if you wanted to say that we need to be worried during the summer break, well, we already are, of course. No, maybe there were some better market conditions. That was a question I had. Maybe less competition, maybe some good forecasts for the future. That was the meaning. Well, we never make bets. We don't make bets on the business plan. We don't make bets on anything. We do our best. We'll be taking a break for the summer holidays for a few weeks, but there are plenty of things to think about. So, of course, we also have the tenders you mentioned to think about. And we'll continue thinking through over the next few days.
Se non ci sono altre domande,
If there are no
In
further
genere
questions,
infatti non ci sono altre
no
domande.
further
bene,
questions.
quindi siamo stati un
Wonderful.
po' più lunghi del solito, ma visto che
It was longer than
forse
usual,
eravamo
but
l'ultimo appuntamento, abbiamo
maybe given the
dedicato un
fact
po'
that
più di tempo alle
today's
risposte
our
alle
conference call was the
vostre,
last one today,
alle
so
vostre domande, per
we took a
cui
few more questions than
vi
expected.
auguriamo buon lavoro, spero che qualcuno di voi
All the very
possa fare
best,
qualche settimana di
and I
ferie
hope that some of
dopo
you
aver
can take a
preso
break during the summer
tutte, diciamo, le note rispetto ai risultati dei semestrali che stanno uscendo,
after you wrap up all the
quindi vi auguriamo
reports
buone
on
ferie
the
e ci rivediamo
information you
presto
have.
sui risultati.
Have a wonderful
Grazie a
summer,
tutti.
and I'll see you soon. Thank you.